Hello finance people, I heard you guys like risk, and so do we. Today, let's talk about the most underrated risk, the prepayment risk. Yes, exactly, that moment when a borrower says, thanks for the loan, but I'm out early.
For banks, that's bad news. Expected interest disappears, cash flow change, and model breaks. Our goal? Predict prepayment risk and help financial institutions to better understand their clients.
We worked with a real-life dataset of over 400,000 mortgage contracts. Prepayments were labeled by a variable that we converted into a nice and clean binary target. 1 if the prepayments occurred, 0 otherwise.
The twist, only 0.06% of contracts were prepayment. So we did what every respectable data analyst will do. We feature engineering like crazy. Market features.
And of course, the lagged version of them. And seasonality, because in August everybody's at the beach and nobody's thinking about repaying their debt.
And of course, the contractual terms. We built the model from scratch, literally, starting with a custom neural network to truly understand the process, before switching to libraries for scalability.
The neural network is made up of layers, which are themselves made up of neurons. Each layer takes numbers, features, does a weighted sum, passes through an activation function, and sees the results forward. The next layer takes the result, does a weighted sum, passes through an activation function. The next layer takes the result, does a weighted sum, passes through an activation function. The next layer does... Finally, the last neuron says, given all this, I don't know. And outputs a number between 0 and 1. A probability of absolutely nothing. During training, the network compares its prediction to the real answer and adjusts its weights over and over until it gets better. Make a guess, get it wrong, adjust, repeat. Eventually, we get a decent probability of prepayment.
To evaluate our results, we use the CPR, Conditional Prepayment Rate. It's a measure of how much of the outstanding mortgage portfolio is repaid early in a given period. It tells us, out of all the loans still active, what percentage got prepaid this month.
So we compare the real CPR with the one predicted from the neural network. But now, let's take a look at the results. What can I say? Pretty solid, especially for an imbalanced problem like this.
The predicted curve captured the direction and timing quite well. Not perfect, but definitely insightful for portfolio managers. In short, we built a model that helps banks see the prepayment punch coming.
Using smart features and modern machine learning.
Thank you.